Good evening, I'm Giuseppe Basile, I'm the Analyst and Trading Mentor. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is April the 10th, 2014, and in this video I'm going to review for you the Japanese majors. I'm going to review starting from the chart, starting from the daily chart down to the 4-hour chart and the 15-minute chart. This video is a daily update, which I often publish on my blog, and it's a review of the market going forward. Let's start from the US dollar versus Japanese yen. Those who follow me know that I traced these lows to highs, and the reason for this trace is in my weekly review. So if you review my newsletter, and you can subscribe for free at my website here, you will understand why I traced these lows to highs. This area of support that we identify between the 50%, 61.8% of this trace is an area of support, and actually, as you can see, supported price, because price never went below the 158 here. 1, 2, 3, 4, and there's a potential here for this level to be supported again. So in order to understand whether the sequence of measure move failed lower on the smaller time frame failed and confirm this level of support, we need to go on the daily time frame, and if it's necessary on the 15 minutes. Yesterday I've mentioned this anchor here, and I've traced this highs to lows here, which is exactly what you see here. And I also mentioned that yesterday we did not see any failure of the 61.8%, 102.15, 102.16 here. And in fact, shorts were still in control on the 4-hour chart, and they were able to bring price into this first target, 103.32. Now, there are two plan of actions for this pair at the moment. There's the possibility for a continuation lower right into that 195 level, and 195 will still be above this level of failure of the long support here on the daily time frame. And this would be a second target here. If that happened, we will need to see what happens during the next measure move short. So as the first target has been actually reached, what I'll do, I will consider my next measure move here. And if price if price gets to this 101.92 and reverses tomorrow, and it never breaks above 102.06, this is going to be a continuation lower. It is very important here, however, that if this 102.06, 07 is breached on the upside, we have to remember that on the larger time frame we are within an area of support. So this could actually be a signal for a potential long trade. You have always to mind the risk here. The risk for this trade would be entry at 102.07 and a stop at 101.31. So you have to consider here there are 78 pips of risk, and the potential could be we could see the market trading to the previous highs, but an important level of resistance would always be at the old 12-way back, 102.79. So you have to consider these parameters here, a 1-to-1 to 1-to-2 reward to risk trade here. So you have to be very, very careful and always keep in mind the risk. Moving to the euro versus the Japanese yen here, again I will start from the daily chart, and again also in this chart we saw the market correcting, but the correction came to a higher level comparatively if we compare this to the Japanese the US dollar versus Japanese yen This higher level was 140 level here, and I've been studying the sequence of measure move lower here, and we can see this sequence on the daily chart, sorry, the 4-hour chart, which is what you see on the screen now. And you will remember that I've considered trace, and we saw market moving into the first and second target here, and a very aggressive way of testing this next measure move would have been to use the extension short here, and one possible signals would have been entering long at 147, above 140.72 with a stop below lows. I opted for a more conservative test here, and that was the highs to lows. And again, we saw yesterday this 141.20 actually fail on the upside, which is again a confirmation of the level of support we have below us. And the all the way halfway back on the 4-hour chart traded here, but as you can see, slightly failed here. So this could actually be a busted setup, and which has the potential to bring price into first target here, this 141.88. But after that happens, there is a possibility for this market to just fail and continue lower. So that's a possibility, and it's very good probability of happening, or it's anyway a scenario that we have to keep in mind. The reason for that is that bulls here are not clearly supporting this move higher after the violation, the end of this move lower. So that's, for me, it's very, very important to consider. Moving to the pound versus Japanese yen, again we start from the daily, and again we had also in this market a similar behavior here. In this market we had a support at the all the way halfway back from lows in beginning of February here, and on top of that support we have now an inner measure move and support when we trace from lows to highs here, and this is the 170.43 level. And it's very important to see whether the 4-hour chart here can help. And you will remember that in this market, the way I modeled the 4-hour chart was from highs to lows here, and if we saw participation in this market on top of this potential level of support. So there was a level of support here from lows to highs, and actually the next measure move brought price right into next measure move short here, brought price right into that 170.27, and we saw the next measure move fail here, which for me it's a potential confirmation of longs here. This market now today went down again into this area of support, and the reason for that is very, very clear here, and is the fact that the all the way half way back from highs to lows here has traded, and actually was able to bring price lower. And I also want to show you that yesterday there was in this market a measure move that failed, and that's exactly the kind of actually no, it's not. This measure move did not fail. I'll just remove the area of support here. As you can see, the lows to highs on the 4-hour chart push price higher into this level, and the high was 171.61 and the target was at 171.70. So he traded very close to it. It did not touch it. So when we traced the next measured move anyway, there was a failure, as we can see here, and there was a failure after resistance was traded here, the 171.58. So to me, this is now a market in which the bears on the 4 hour are in control. There is a daily area of support here, which did not work cleanly here. We saw price going lower twice, and there is a possibility for a continuation lower. Now, if we move down into the 15 minutes, we can also study and know for sure and in detail what is the level that we have to look at. And this would be, if we trace from lows to lows here, the level below it's 179.78, and the low here is 179.96. So I will not consider this toughest target hit here. So to me, of course, we can be more aggressive here, and potentially one could say I will use the 170.57 to understand whether there's a continuation lower or not. However, the best level would be this 171.06. If you are aggressive, you can consider 170.58. So a breach of that level would actually provide a confirmation of support on the larger time frame, and the larger time frame is this whole area starting at 170.44. So this is it for the Japanese majors. I hope you enjoyed this video. I also hope that this video is useful. I think there are some opportunities here. If you look at sequence of measured move on top of this level of support in these three markets, I wish you a very good weekend. And if you want to look at my newsletter, just go to my website and subscribe for free. And in the weekends, I'm always sending out a weekly review of all the markets I follow. Thank you very much, and bye bye now.